How great would it be to be able to see into the future? Just imagine how much better today would be if we could have gotten a glimpse of it yesterday or even last week. What if I told you that I have the crystal ball to the stock market? And no, I'm not a self-proclaimed psychic. I'm just a regular person with access to the best kept secrets in the market. And lucky enough for you, I'm pretty bad at keeping secrets. So get your pen and notepad out, get comfy, because you're in for a treat. Welcome to the vault.
What's going on, family? It's your favorite hairless YouTuber back again with some brand new content just for you. As always, before we get into it, let's get started with some Monday motivation. Remember to take care of yourself. Self-care is giving the world the best of you, not what's left of you. You can't pour from an empty cup. Today's video will be a summation of all we've learned so far about reading and understanding the stock charts. We'll be applying support, resistance, and trend lines, all to a candlestick chart. We'll also be using TradingView's bar replay tool so we can watch them all in action. I might also throw in a little extra surprise somewhere in the video. The only way to find that out is by paying close attention and sticking around to the end. If you're just joining us here on the channel, we appreciate you for checking us out. And if you're enjoying what you see so far, be sure to let us know in the comments and by liking the video and subscribing to the channel with notifications turned on so you don't miss any new content. Also, don't forget to use the link in the description to get access to our free mini course, The Mind of a Master Trader. Only available for free for a limited time. Without further ado, let's get it. Before we get into the chart, let's do a quick refresher of support, resistance, trend lines, and candlesticks. If you are just joining us and you aren't familiar with any of these, I suggest you go watch the previous videos before continuing with this video, because today's video is a summation of those videos, so this video will be difficult to follow without first watching those videos. Support is the floor for a stock's price, and resistance is the ceiling. With confirmation, we buy at support and sell at resistance. Trend lines are diagonal lines of moving support and resistance. They follow a stock's general direction. An uptrend line will connect the increasing lows of an uptrend, acting as moving support. A downtrend line will connect the decreasing highs of a downtrend, acting as a moving resistance level. Remember, if and when a support level is broken, a good support level will become resistance, and vice versa, a good resistance level will become support. Here are the key components of a candlestick. Remember, a bullish candle will be green, signifying the stock closed higher than it opened, and a bearish candle will be red, signifying that the stock closed lower than it opened. This isn't a candlestick video, but here's a bonus component to consider. Candles come in many different sizes. So note that the thicker the body of the candle is, the stronger the move, whether bearish red or bullish green. And the smaller the body, the weaker the move. Now, let's get into this chart. First, let's take the training wheels off and change this into a candlestick chart. Calm down. Remember, we're prepared for this. We're currently looking at the weekly candles, so each candlestick represents a week real time. We'll start with our trend lines. We can see that this stock is currently trending up, so we'll start by connecting the low points of the chart. When looking for touches with the candlestick chart, you want to include the wicks and the open or the close of the candles, and you want to avoid drawing lines that cut through the bodies of the candles as much as possible. Now we want to get an idea of the range of this uptrend, so we'll also connect the high points to create a channel. Here's where I see it as the best place to draw that line. This line is respected as both resistance and support. However, the price is already broken out of this channel, so a new channel must be identified with a new trend line for the high points. This line has been respected as moving resistance several times, which gives me the confidence that this is a dependable line. Now that we have our trend and our channels identified, let's add the support and resistance levels. I'll start from the top. Remember, the more touch points, the better. Now that we have our trend and all the major support and resistance levels identified, Let's zoom into the daily candles and see if we can make some accurate predictions based on these lines. We can already see that these same lines that we drew based on the weekly candles are respected just the same on the daily candles. Now that we've zoomed in, we can also see a smaller downtrend line here. We'll go ahead and hit play so we can watch how these candles respect the support and resistance levels that we have drawn. So far, we can see that 73.90 continues to be a strong support level. The blue trend line that we drew here has been respected as both resistance and support. And the resistance level at 83.07 has also been respected very well. Here, you can see the price move within a tight price range with no clear direction. This is called consolidation. This strong bullish candle identified the start of the bullish direction. Price finds resistance at the purple trend line, but eventually breaks through it and the 87.46 resistance level. Take note of this. When you get a strong bullish candle like this one, breaking a resistance level, you can bet on the momentum continuing in that bullish direction until it finds another solid resistance. After that big move up, we can see that our price stalls at our 94.31 resistance and fully rejects at the 95.72 resistance. We get a big drop back down to the 87.46 level that was resistance here and use it as solid support for the bounce here. Remember, good resistance becomes good support. We get a slight break of the support levels before a strong reversal back to our 94.31 resistance. This green E that you see here represents the stock's earnings, which is likely the reason behind this explosive move up, where it blasts through our resistance levels until it found resistance at the top of this purple trend line that we drew as part of the channel on the weekly. Because we're in new price territory, or what I like to call price discovery mode, we can identify new levels of support and resistance, starting with our new all-time high here at 122.49. We see that the stock's price is now nearing the top of this channel and the all-time high, which both acted as resistance during the last bullish run. We can use that knowledge to make a reasonable prediction that the price will reject at or near these lines. So now could be a great time to start building a put position for this stock. Personally, I would wait until after its upcoming earnings before I made a decision, because earnings can be very unpredictable, even for the most predictable stocks. Regardless of the earnings for the stock, I would expect it to fall back to at least the 114 to 112 support levels. And that's assuming that it doesn't blast through these resistance levels like it did on its last earnings. You know what that sound means. It means we have a stock alert for this week. It's probably pretty obvious to you by now that we've been analyzing this week's stock alert. But what is the name of this stock that we've charted up? The name of this company is Advanced Micro Devices, or AMD. For those of us that aren't familiar with AMD, AMD is in the business of making computing and graphic chips and processors for companies like Microsoft and Dell. To sum up what we've already said, the play for this week is to buy puts with 30-day expirations and the closest affordable strike when AMD is at the 122.49 resistance, with confirmation that the resistance is being respected. I expect AMD to fall to the 114 to 112 support levels after it bounces off resistance. Remember, we provide these alerts only as suggestions. Although we have done our fair share of research and analysis, it is still very important that you always do your own due diligence before making any final investing decisions. If you had any trouble following this video format, or if any specific parts of the video didn't quite click for you, 1, please let us know in the comment section, and 2, don't be afraid to go back and rewatch this as many times as you need to. This information can be overwhelming, especially for beginners, so be patient with yourself as you try to learn this new skill. Just like watching a movie for the first time, you can miss some key parts on the first playthrough. Watching it again and again can allow you to see or hear something that you might have missed beforehand. As we end today's video, just remember, don't be afraid to fail, because it is in the darkness where we learn to appreciate the light. No battle is won without a fight. Failure should only change the strategy, never the goal. If you've enjoyed this video and want us to make more videos more often, you know what to do. Be sure to hit that thumbs up button below and subscribe to the channel if you haven't already. Also, comment below your thoughts and questions to let us know how we can continue to improve the channel. This channel and all of this content is made for you. Thank you for watching this video, and I'll see you in the next one.